Hello, traders. This is Michael coming to you from Game Edge on Thursday, August 21st with our pre-market prep session. As always, here at Game Edge, we'll cover our three pillars: sentiment, structure, and trend. I want to start off with looking at the GameEdge.us webpage. Make sure you come join us. Newsletter, sign up here for a free weekend newsletter. Put your email in. You'll be sent those every weekend. Tons of educational content, as well as how to use our tools and thesis here. Sign up for our free courses. Game Edge Fast Pass is our flagship education course, as well as the School of Options and the mental side of trading. Again, all these are free. Just provide your email. And then, as always, you can click on the pricing tab. Come join us in our paid Discord, where we have a large trading community of experienced traders, as well as new traders, where we show you how to use our tools, and we are the Game Edge team that are in the trenches trading with you, using these tools and showing you how to apply them and become a profitable trader. And if you're a current member, you can click the sign in, and this will take you to the web app. All right, moving on to the market trend model for today. Get you orientated. This is based on the tick index. You can research that at your favorite investing website. If you're not familiar with the tick index, basically this is buying versus selling in the overall market. Obviously, we want to be on the right side of the overall market. That's 75% of the battle. Our bolded white line here is our cumulative tick, intraday instantaneous CT. We monitor this to see if there's more call or more buying versus selling happening in the overall market. And then we add some short-term moving averages for a time frame and momentum overall look. Again, you want to see this bolded CT cross above these moving averages and be in a lower left to upper right positive sloping pattern if there's more buying in the overall market than selling. So up here, new highs versus new lows breadth indicator. New highs versus new lows matching yesterday. Obviously, you want to see new highs outpacing new lows if the market is looking to appreciate. And then our filtered cumulative tick plus 1,000, minus 1,000 institutional orders here. If it is below the zero line, then institutions and larger market participants are selling in aggregate over the overall market. So again, we've had a couple days, really 4 days, 5 days of selling, staying below the zero line, indicating institutions were most likely selling the overall market. And we're just cutting into the colored ribbon as we spoke about yesterday. We were cautionary heading into yesterday, as well as the past few days, as we weren't really seeing price match our market trend model matching the price appreciation. And we were in a sideways consolidation, so we could move either direction. So this is the tick US, which includes all the regional exchanges. So this is a little bit more noisy. But we like to watch it for sensitivity. And then we move on to our quality data. Again, this is the paid participants for the exchanges. So again, this is what we model our mechanical portfolio on. And as we talked about yesterday, we were diving into this colored ribbon. This colored ribbon is our longer look back period for positioning in the overall market. And you want to see the bolded CT above this if you're bullish. And within this overall ribbon, we could drop either direction. So we could move to the upside or to the downside. So we'll continue to watch that. Towards the end of the day, we did pull the nose up a little bit and tried to move up into these moving averages, but this is a prone to failure look. So we could just move back to the downside. So again, we'll monitor this intraday to see if there's more buying versus selling in the overall market. And we want to be on the right side of that also. Moving on the SPXA, this is our cruise ships. Again, longer term expiries. Denoted by the tiles over here. We're heading into September for the next monthly expiry, but this has included all expiries, obviously on out to extended in time. We're call dominated still in this structure, really not seeing a significant change. A little bit of erosion of the out of the money call speculation, but not a significant change. Again, monitoring these transition levels we've been talking about. We'd like to have a spot price above these transition levels for a price appreciation, but we're slipping a little bit further away from the top of the transition levels. So we're going to need to recover these if we're bullish and want to see a significant move up towards 6,500 or even 6,600. But again, institutions really not changing their overall positioning with this market pullback. If we start to see this change, then we will also look for further downside in the overall market. Moving on to the SPXP, this is our speedboats, obviously denoted by the tiles over here. These are daily as well as weekly expiries. We like to monitor this day over day. We are call dominated on this overall look. Again, just barely call dominated with 3.93 thousand on the net GEX. So this could be pushed either way depending on where spot price is and out of the money put speculation. If you go back the past few weeks, you'll denote that there's been a significant change in the net delta. We started discussing the out of the money put speculation really on the 12th to August 13th. We'll discuss that in the GEX ratio chart. We saw the erosion of this out of the money call speculation, and we're seeing out of the money put speculation, downside hedging start to occurring. And then now that's come to fruition in the overall market. So transition above us 64.05 to 64.10, downside 63.50 and 6300. But just to note that we have significant out of the money put speculation still. And as spot price moves down, we capture more of these negative deltas, obviously causing a resultant dealer, market maker having to sell the overall underlying to hedge the inclusion or capturing this negative delta as we continue to move to the downside. Above transition, we'd be looking for 64.50 and then move up towards 6,500. You see COTMC there at 64.50. So we are call dominated, but an erosion of this overall structure. We'll need to see this repaired if we want to have a significant move to the upside. Moving on to the GEX ratio, this is a put call ratio where we add a time component, which is gamma, that allows us to look at the short dated overall structure and who's winning the battle. We started discussing us reaching a high point on August 13th, which was 2.45 or a 3. We ramped to 3 in the GEX ratio. This was kind of getting frothy. And then we talked about the overall negative slope that was coming into the GEX ratio as spot price was moving sideways. Again, this was a divergence we were observing. We said not necessarily cautionary at the moment as spot price is moving sideways, but just denoting that the overall sands and the overall winds of the SPX structure were starting to shift. Again, we were above 1, which was call dominated. That was still bullish. But again, it was just a feather in our cap to take note of. And you can see it just continued to decline as spot price went sideways. Then we had this doji day. We saw this decline in the GEX ratio again, indicating that out of the money call speculation was eroding. Out of the money put speculation was starting to overrun the complex. And then finally, we said this will resolve of one of two ways. Spot price will come down to meet the overall change in GEX ratio, or GEX ratio will start turning back to the upside. Well, as a result, spot price continue to fall with the overall GEX ratio. So now we're below 1. Historically, this is an area where we can see a turn back to the upside, but you'll denote back here on August 1st, we actually hit 0.6, which was a low of the GEX ratio. When we start reaching 0.8 at 0.6, that's really start to seeing extreme to the downside. We'll start looking for a possible resultant move back to the upside. So we'll monitor this, again, seeing a slight negative slope in the GEX ratio as we head into today. So we're giving an edge to the bears as we're under the 1, indicating that the short dated put gamma is ruling the overall complex, overriding the call gamma. So this chart really is a great tool to watch for divergences and look for the overall structure changing in real time as we move day over day. And then obviously you saw the resultant back here on August 1st, we hit an extreme, and then we started seeing a positive slope in the GEX ratio, indicating that calls were entering the complex. Overall, the out of the money put speculation was starting to wane, and then we got back above 1. And then we continue to see price appreciate, as well as the GEX ratio and this overall kind of sine wave look where we hit the out of the money call speculation, resulting monetization, and then we just continue back and forth. So again, we continue to monitor this day over day. Moving on to the delta balance, again, we're seeing that overall drop in the delta balance that we were discussing, dropping down towards the -1. Now we're seeing a positive slope. This red is the left-hand plane, that's below spot price. But you're seeing the delta balance below 0. So again, indicating that put speculation is maintaining overall control. And we want to see this green line, which is the right-hand plane that's above spot price. You want to see this out of the money call speculation start driving back to the upside in a positive slope, indicating that out of the money call speculators are coming into the complex, adding more positive delta to our book gets longer, dealer book gets shorter. And obviously they have to buy to hedge, underlying to hedge back that delta back to neutral or flat. As of now, we're not seeing this. We're seeing that short-term bounce heading into today, which could be possible. But then you see on out in time, we see a significant drop heading into Friday as well as next week. So again, we'll continue to monitor this as we're seeing this back and forth of kind of movement within the overall structure. But as of now, we saw this drop, could see a short-term bounce to the upside, but then a resultant downward slope again below 0 on out in time. So again, indicating the structure could get bearish after this short-term move back to the upside. If we see that come to fruition today, again, quick takeaway is we're below zero in the delta balance as well as the right hand plane. So edge to the bears and the put speculators heading into the day. Net stack command for today, highest sensitivity levels from a delta balance for a delta standpoint. Again, we call this a locked horns type look. We have in the money calls below us that can be supportive, or in the money puts above us that will most likely be resistive and difficult to move to the upside. Again, 3-1 on in the money puts, left hand plane integral versus right hand plane. So again, movement to the upside will be extremely difficult, and thus we see a large amount of out of the money call speculation via our volumetrics. Charm, again, resistive to the upside as these out of the money calls will continue to grow. 1.5, 1.7 to 1 ratio from the right hand plane to left hand plane integral. Out of the money puts, these will continue to be supportive as we move down towards that 63.50. That was a area we bounced yesterday. We were really looking for a possible move back to the upside from 63.50 from our SPX game plan. We were kind of looking for a V-shaped recovery. We posted that pre-market, and that really came to fruition midday as we saw a quick bounce back to the upside. You see the gamma levels, highest sensitivity, as well as the Vanna levels, out of the money puts, out of the money calls. Again, sensitivity levels that we're watching to the downside and to the upside. All right, moving on to the SPX P0 DTE structure for today. Drunken sailor range really well defined. We'll talk about our pre-market levels here. Price as we'll flip over to our trading view chart. Below the drunken sailor range, we'd be looking for 63.50. That's that index level. And then we talked about that on the high sensitivity level from Charm and Gamma as well as Vanna standpoint. And then 62.50 net delta for in the money calls. So that's a little ways away from where we would be on spot price. So we'll be watching for 63.50 to be that first area for a possible bounce. If we're in the drunken sailor range, you see the very low exposure, 200 contracts on the net OI, so will be driven by the intraday volumetrics. That's why we'll be watching our vol M, vol U, and vol D commands. And then if we're above transition as well as the drunken sailor range, we'd look for a quick drive towards 64.30. Again, we had a possible secondary drunken sailor area from 64.10 to 64.30. Again, highest gradient of speculation up there. You see that at PGEX, and then above 64.30, 64.50 is COTMC. It will be a heavy lift to get above 64.30 for today, as we'll continue to drive up above 64.10. Most likely see some stalling up there around that 64.30, again, unless the intraday volumetrics as well as the market trend model change significantly. All right, let's move on to our trading view this morning. COTMP this morning, again, that's where out of the money puts go in the money. We're already reacting at that 63.68. So keep that level on your chart. We'll move over to the SPX as I've outlined the drunken sailor range for today, as well as the transition areas. So we're already bouncing or oscillating around that 63.68. Again, we'll watch 63.50 to the downside and 63.40. That's where we bounced yesterday. That's those lower bound areas of the gamma, as well as those delta areas that we'll be watching in GEX around there. So a confluence of multiple levels. So the trading plan for today would be below COTMP. We'd be short for a move down towards 63.50, possibly 63.40. If we see a bouncing around this 63.70 area at COTMP, we'd look for a bounce to the bottom of the drunken sailor range, 63.80. If we recapture drunken sailor range and really start to look constructive on the intraday volumetrics as well as the market trend model, we'd look for a move back towards transition. That would be the first area we'd most likely see some stalling and failure. If we fail under transition, we'd probably take a short back down towards 63.80. If somehow we do get back above transition as well as P-trans, obviously be looking up towards 64.30 for a long, and then that would be that first stalling area we'd look for. So hopefully that helps everybody. Trading plan for today. Again, thank you for joining us. I'll flip back to the 0 DTE structure. Again, you can look at that. Again, within the overall drunken sailor range, it will probably be extremely choppy. Below drunken sailor range would be short, and then above drunken sailor in transition, we would look for a quick long towards 64.30. We flipped through these stocks here, NVIDIA. Let's go ahead and look for these. So AMD really testing P-trans, COTMP pre-market. Apple's below 0 GEX. We'd be looking for COTMP to the downside. Google kind of hanging around 0 GEX. Obviously, P-trans to the upside would be that first level. You see Meta has already tested that 0gex level in Intrans pre-market and failed. So again, key level there. Supportive down here, possible at 740 in COTMP. So I think you kind of get an overall idea of a confluence of levels below us, levels above us, and we're kind of stuck on these Mag 7 stocks really in between these key levels. Nvidia coming into COTMP and in P-trans and 0gex. So again, 173, 172.50 would look for those to be supportive. If we're below those two levels, obviously 170 to the downside. We've already saw Tesla react at Intrans and 0gex. We've been discussing it at Tesla for multiple days. PLTR is another obviously stock that's getting a lot of attention, as well as Uber. So PLTR again tested that PGEX level. Again, P-trans to PGEX level is based on these mechanical levels and executing these, and these also do provide very nice intraday trading levels that we can trade off of. So again, pull back to P-trans, COTMP, as well as 0gex and Intrans. We'll be watching those key levels in PLTR. And then Amazon around 0gex. You see it already tested P-trans this morning. So it is pretty amazing how these stocks continue to react around these key gamma delta levels that we identify here at Gamma Edge. All of these TradingView scripts are available for our members to download. They're automated. You just copy the script and paste them. We provide those for Thinkorswim also for our members, and we have a 0DD script as well as a full complex script, depending on what type of trader you are. So you can overlay those scripts onto your existing broker or charts, and it makes it ease of look and ease of trading to mark your trading plan for the day. So we'll flip back to where we're at with the Qs and SPY before we sign off here. Thanks, Daniel. Appreciate it. So SPY is already below Intrans and 0gex, negative gex below us in COTMP. Those would be two levels to be watching pre-market or at the open, sorry. Qs will need to get it back above Intrans 564 for have any possibility for move up towards 0gex. You can already see where you started reacting close to that level pre-market. IWM below Intrans, so that's obviously bearish and negative. And then we have SPX Premarket testing that COTMP level, multiple sweeps below so far. So again, will be a key level going into the open. So, all right, thanks everybody for joining us. Make sure you like and subscribe on X as well as YouTube. We'll try to do a midday recap like we did yesterday. Past 3 days, we've done midday recaps, really just to look at our volume command as well as price action. So make sure you check those recaps out, be notified when we go live. And let us know if you need anything. Comment on X. We'll try to respond as soon as we can. And that's it for this morning. Everybody make it a great day, and we'll see you later.